Just how royally screwed is the pre-construction market right now as we're tumbling into a falling market and into a buyer's market? Well, I can tell you we have 80,000 units currently under construction in the GTA area that are coming online sometime in the future. And that is a lot. That is definitely a lot. The magic question is, will we absorb them all? And I'm going to break that down for you in this week's episode of Prime Properties TV. Now, make sure you stay tuned for that. But if you are an owner-occupied buyer, meaning you're going to live in that property, this, surprisingly is actually where you can find some opportunities right now. Again, there's obviously some risk, right? But finding somebody in the current pre-construction assignment space that cannot close and they bought years ago and you can buy it from them for less than the value of, like, say, the surrounding market right now because they can't close for interest rates or whatever reason is exactly how you buy the dip. So what you're doing in this process, if you're trying to be opportunistic, is you are going back in a time machine, stepping into one, going back to whenever they bought it, and then buy a condo at that price to live in. Now, of course, there are 100% risk in this, but this is exactly where the opportunity of this is right now, because where there's someone losing money, there's another side to it where you can come out with some benefits and some positive benefits. And if you are in that camp, you can book a call with me using the link that's right here. It's www.chatwithzen.com.
Simply click on a date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then.
Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a Remax in the greater Toronto area, on top of making awesome educational real estate content just like this one for you. And if you find any of these videos I've been making for years that helpful in your real estate journey, make sure you do me a solid and spread the knowledge by smashing the like button and subscribing to the Prime Properties channel. And on this week's episode, what the heck and how royally screwed is the pre-construction market right now? Yeah. So currently we have 80,000 condos under construction right now. 80,000. That is a lot. We also have the highest mortgage rates since 2008. The market is also heading towards a buyer's market, which means prices are coming down right now if, it already hasn't. And, you know what? To make things worse, 1 in 5 condos are actually selling. So how much risk is there in the pre-construction space? Yeah, I would say definitely there's some risk. It's not, obvious to some yet, but there's definitely some. Now, I've said this before about the pre-construction space going all the way back to, I think, like 2018 when they had that doubling of the development fees, right? I think it was like February 2018, if I remember correctly. And if you're buying at a premium that is so high relative to the current resale market that it doesn't catch up to you, and when you have to close, Houston, we have a problem. I personally saw this in the freehold space in 2017, and it came to fruition in like 2018 and 2019 because freeholds built a lot faster. So this problem for the condos is coming to roost now, even though it's a very, very long timeline to build the condos. Look, I'm not like trying to be a fear monger because that's honestly the worst thing out there because there's tons of people like that. But I'm just trying to walk you through my critical thinking of what's happening right now and what can come, and you can arrive at your own conclusion on how bad it is. Also, I'd love to hear your thoughts after seeing all this in the comment section below, so I will be there watching and reading your comments. So allow me to explain my math. That's kind of, I call it back of the napkin. I'll put it over here. So currently there are 80,000 condos under construction. I'm going to emphasize that a little bit, okay? And for the sake of just easy math, let's assume that 80,000 units is spread over the course of 5 years, which is on average the condo time to build. I know it's a little bit more, but let's just say 5 years, which means we got 16,000 units each year. So, that doesn't seem much, right? Not that bad. Until you realize that at the high of like the pandemic when everyone's listing the condos, we had 4,600 active listings, right? This is right after the pandemic. So even if you spread out 16,000 units over a year, called 12 months, that's about like 1,300 new listings every single month, or 30% more listing. Not that bad because, and this is a saving grace, most pre-constructions, if they close, generally go straight to the market if they already haven't during the occupancy phase, right? So, like I said, that is a saving grace. So it's not like a huge problem. But now let's do some more math. Let's assume 80% of these condos were bought by investors, if probably not more, which again, it's very normal because end users do not buy condos unless it's like a special terrace unit or something, right? For downsizing. And I call these investors because they had or have the means of closing them. But let's say 10% of these buyers are not investors and they are speculators, right? And they had no chance of closing them at all. And they may have even had multiple of them in hopes of trying to flip the contract for a profit. There are definitely some people there. So almost 1,300 units not closing is most definitely a very significant amount of inventory in the assignment space each and every single year. But when you spread that out over the year, I personally do not think it's going to move the needle enough. And I'm not trying to sugarcoat this for you, but I'm just saying the probability of that. And this is probably also why it's going to keep preventing prices from appreciating, because there's stuff that's being sold for less because they're distressed sellers, right, in the assignment space. Now, I suspect these speculators can and will unload them at loss if they can, because in Ontario, people always think about this whole foreclosure thing. It's not like that. We are a recourse province, meaning that if it goes to court, your assets and wages can be garnished for a breach of contract. So call it this 10% of speculators are going to be in a lot of big doo-doo, but probably won't move the market enough so that it's going to like crash, quote unquote. Best case, they lose some money and they keep some of their deposit. And this is obviously predicated on where the resale value is. Worst case, they're levered up to their eyeballs on refinances to buy a lot of these pre-cons in hopes of flipping them. And they're all underwater right now and all essentially, are going to lose their deposit and try to exit. And hopefully it doesn't affect the properties they refinanced on. So how bad will it get? Honestly, no one knows. And most definitely just depends on whether prices go up or not, right? The question is this pool of speculators greater than 10%? I don't know. I really don't know. And I don't really think anyone knows, right? So let's keep going here. Let's assume that the average condo purchased in 2018, which is closing now, was about $1,200 a foot. Note, these prices I'm using in this chart over here are like core downtown Toronto prices. So if you are outside of the core in a 905, it's less. But you know what? Just look at the surrounding resale value so you understand kind of my math, right? But what I'm personally looking here is the spread between pre-con and resale. And that's where the problem lies. So if you bought a pre-construction condo in 2018, the closings are probably happening now, maybe a bit from 2017 because of COVID delays, right? But let's say resale is $1,200 a foot right now, which I would say is a little bit rich in the current market, but I am an optimist. So it means that if you're to close now, you're losing $0, right? $0, meaning that your pre-construction condo that you purchased 5 years ago is closing without any appraisal problems or any appraisal risk, because in the 5 years that you bought it, the market caught up to the premium you paid for it. That is true, which means that in 5 years for buying this, you've had zero appreciation, even though the market went up and then down, right? See why I was kind of skeptical about pre-con prices after 2018? Again, no shade thrown out there. I'm strictly just talking about averages right now, because 100%, if you bought at certain projects, there were home runs at that time too, where even if you sell now, you're in the black and making money. So this is exactly why in the assignment space, if you can pick up, call it a 2018 pre-construction at cost, which is probably on par or maybe sometimes a little bit under resale, it's actually a pretty good deal if you have a very long-term horizon. And that's the big if. It's not a quick flip. You're basically, like I said earlier, you turn back the clock 5 years to buy a new product and it's not under rent control. Cha-ching, right? Now, where this problem gets bad in this chart here is as the years come and they progress, it gets worse and worse. So in 2024, assuming resale prices don't go up, your spread now, because you bought at a later time, price has gone up in the pre-construction space, the spread is $100 a foot or 7.69% underwater when it comes time to close. So for anyone who does not understand this, right, it means that if you go get a mortgage on it at the banks will only lend you money on what it's appraised at or what it's worth in the resale market. And if it's under your purchase price, you have to come up with the difference on the cash. So at a 70% difference on, call it a $500,000 purchase, that's $35,000, which honestly, it's not that bad. And you could do the math for your own property if you are in this situation, right? This is where the buyer's market high interest rate environment starts to kind of kick in and kind of like kick you while you're down, right? In a very negative way. Do I personally think resale condos will go up in price with, call it this much inventory at 6% mortgage rates? Yeah, I'm going to say the probability of that is pretty low, right? Can it change? Yeah, absolutely, right? But again, probability very, very low. Now, can call it these investors, like 80% of these buyers close? I would actually say also likely because the spread is not that bad, right? Also, if you're in this boat right now, just putting it out there, there are actual banks with mortgage products that will allow you to lock in your purchase price at the appraisal value 18 months out, give or take. Granted, your locked in value is also at today's rates, which isn't great, but you are not going to have that appraisal risk if you think you kind of bought higher than the resale market in the next few years if you're coming up to closing. And if you want my broker's contact, just shoot me an email. I put my email somewhere on the screen over here and just say, hey, Zen, I need that broker contact for whatever, right? It's on the screen here. Now, let's go to 2025. Again, assuming the market doesn't fully recover, but also doesn't go down, right? Because, maybe interest rates are coming down a little bit. The spread is now $200 a foot or 14%. And will the resale prices appreciate 14%? So you're not at appraisal risk? Yeah, no, I don't think so. When the market was like ripping and going crazy, condos did like 10% a year for like 2 years, I think. And historically it's been at 6. So to do 14, no, very, very, very low probability. Will 2025 maybe see some appreciation? Maybe, right? Because maybe rates come back down to the 4%. We had a little bit of activity earlier this spring and current buyer comes back out, right? But is it going to absorb all this inventory from the buyer's market in the last 2 years? Yeah, I don't think so. This is why I don't think it's going to appreciate 14%. Just no. So there, the spread is getting bigger and bigger. And on the $500,000 purchase, that's 70 grand, right? Obviously the purchase is probably higher, it's 500, but you do your own math, right? Now, the pool of those who cannot close is very likely getting bigger and bigger from the previous years. You see my point, right? So when we get to 2026, that spread is now $300 a foot, or call it 20%. It's getting bigger. In 2027, it gets to $400 a foot and 25% spread. This is where we will see some big problems unless the market really recovers and at least goes on a rip. Is it going to go on a 25% rip? I don't know. I don't know. So the gamble for those with long closings is, what is the spread on your pre-construction or these 80,000 pre-constructions in the entire market relative to the value of the market when it closes? Do you think it's going to catch it? That's the game of risk and hope a lot of these pre-construction buyers are watching for right now. And as this inventory has a problem closing, can we see issues pop up in the resale market that affect the entire market? Absolutely. But will there be measures to mitigate this from happening? 100% from the builders, not like, OFC or the banking regulators. The builders are going to probably offer vendor take-back mortgages in like second position to bridge that gap in the appraised value and what they bought it for. And I'm already seeing it right now as some people are closing. I'm almost seeing it, right now in the low-rise space as much as I saw it in the 2018, 2019 space. So the buyers are going to be able to close these. But if they need to sell right away because they're highly cash flow negative or maybe bleeding too much, because remember, you have two mortgages, right? The bank's mortgage and the builder's mortgage, right? That could suppress the values of resale because people can buy these at a discount, which means no general appreciation in the entire market. Now, can some of these investors who've been in the market for years absorb this loss? Absolutely. But can some not? Also 100%. But nobody knows how big of a risk this totally is, right? And also, can the speculator component put a risk in the inventory as well because they could have closed anyways? 100%. But how are the builders going to mitigate this? Well, the first thing is they take their deposit, right? And then they could potentially close it themselves if they're cash rich, which, a lot of big builders are. But if they're not a big builder, they could essentially take like an inventory loan and close it themselves so that it's ready. They could rent it out or selling, depending on what that building's pro forma and what the profit margins look like, right? So I do think these units that have problems closing will be coming to the market. But will there be some builders whose performers aren't great that could spell disaster for them? Yes, we're likely going to hear it and see it. But I do not think it's going to move the entire market unless these percentages of speculators and investors who can't close is bigger than what I have right now as a probability. But it definitely makes, the potential problems we're already in right now get worse. And it isn't going to get better with this at all, right? So the question with all of this math and probability and how it could play out is, what is the pricing of these units going to be actually worth? Not the pre-construction price, but on the resale market. And nobody has the answer to that. So this is my slightly more complicated back of a napkin math for you in terms of what the risk in the pre-construction space is that I am personally seeing. Are they royally screwed? I wouldn't say royally screwed, but there's a very good probability that could be a case. And you let me know in the comment section below what you think of my math. I'm really looking forward to seeing what the situation is. And if you are looking to capitalize on the situation where you can essentially turn back the clock and buy Toronto condos under a resale price, and if you fit in that case, then yeah, make sure you book a call with me using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?